Dear guests, I feel delighted to introduce you. Do you hear me?
Yes, we can.
Okay. I feel delighted to introduce you the first presenter for today, Ms. Anneke Kosa, who is coming from the Bank for International Settlement. Ms. Anneke Kosa is a senior economist at the Secretariat of the Bank for International Settlement Committee on Payments and Market Infrastructure. Her portfolio includes conducting research and supporting the Secretariat's policy and standard standing work in the area of central bank digital currencies, crypto assets, and stablecoins. Ms. Anneke holds a PhD in Business and Economics from Tilburg University. Ms. Anneke Kosa is going to make a presentation about the central bank digital currency, and the topic of the presentation is factoring and international dimension into CBDC design. Ms. Anneke Kosa, the floor is yours.
Thank you very much. Thank you also for the invitation. It's been an honor to be here. Let me share my screen. This one. Let me see. Can you see my slide? Full size? Perfect. So what I would like to do today is to talk about cross-border payments, and in particular about how a CBDC could play a role in there. And before I do so, I would like to start with an overview, to give you a high-level overview of central banks' involvement in CBDC work. So some of you might know that we at the BIS, each year we conduct a survey among central banks worldwide to understand the status of their CBDC work, to better understand the motivations of why they're working on a CBDC, and also to understand their intentions of potentially issuing a CBDC. So last year, we did the survey for the 5th time in a row. Actually, we are now preparing the 6th one, so we will be sending out the survey in a few weeks again. But last year, we did it for the 5th time in a row, and we had a record number of participants. So 81 central banks across the globe that participated in this survey, which is about, these central banks, they represent more than 90% of the global economic output. So it gives a good representative picture of what's happening around the world. I should also say that of these 81 countries, 25 countries were advanced economies, and more than 50 countries were emerging market economies. So again, we have a pretty good representative picture. So what the results are showing of this work, and I put them here on the slides, is that the central bank, the involvement of central banks in CBDC has really risen further last year. So 9 out of 10 central banks are exploring CBDCs in some way or another. They're doing some CBDC work. 9 out of 10 central banks. And we also asked them about what exactly are they looking at, retail, wholesale, or both? Well, more than half actually look at both, retail and wholesale CBDCs. And also more than half are actually now concretely developing an experiment or developing a CBDC or running pilots. So it's more than just doing research. They're really building and experimenting with it already. And what we also see is that the work on retail CBDC, as opposed to wholesale CBDC, the retail work has actually advanced most to more concrete implementation or developing stages, more than wholesale CBDC. Now, on the intention, so we asked them, okay, how likely are you actually to issue a CBDC in the near or medium term? So more than half of the central banks, they consider it a possibility that they will issue one in the short or medium term. And what these graphs are showing is that the likelihood of issuing a CBDC has gone up last year compared to previous years, so it's growing. And what we also saw is that the likelihood of issuing a retail CBDC is a little bit higher than issuing a wholesale CBDC. What we also found, and that was actually similar to all the years before, is that the likelihood of issuing a CBDC is generally, or retail CBDC is generally higher for emerging markets than for advanced economies. And two other lessons from last year is that both the pandemic, but also the emergence of stable coins and other crypto assets has actually boosted the work of CBDC by central banks on CBDC. So 1/3 of the central banks, they said that the COVID pandemic had changed their preferences for issuing a CBDC, and actually 80% of the advanced economies, they said that their work on CBDC was accelerated by the emergence of the crypto assets and stable coins. So on drivers, so why are central banks considering a CBDC? So this slide is really about the retail CBDC. So we asked them, what are your motivations of doing so? And what we saw is that, like in previous years, emerging markets have different motivations than advanced economies. So if you look at the red dots, these are the results for the advanced economies. Here you see that improving domestic payments efficiency, improving safety, payment safety, improving financial stability or guaranteeing financial stability are the key drivers for advanced economies. And looking at the left green circle, you see that the financial stability reason has actually grown in importance compared to the previous year. And that might be linked to the earlier results that especially the advanced economies, that they have boosted, so that their work was accelerated in response to the emergence of stablecoins and crypto assets. Now, looking at the emerging markets and developing economies, so the blue squares, what they tell us is that emerging markets, for them too, safety, efficiency, stability are important drivers for working on a retail CBDC, but financial inclusion is really the key driver. So emerging markets, their work is mainly driven by reasons of improving financial inclusion, getting central bank money into the hands of the currently unbanked people. And I think another difference when you compare the two groups of countries is not only the financial inclusion driver, but also the cross-border efficiency driver. So especially over the past 2 years, especially for the emerging markets, cross-border payments efficiency is also an important driver, why they're looking into a retail CBDC. And that's represented by the green circle on the right. So that's retail. What about wholesale? So the drivers for central banks working on a wholesale CBDC are a little bit different compared to retail. And here, the difference between emerging markets and advanced economies is a little bit smaller, especially if you look at the cross-border efficiency. So over the past years and also last year, enhancing cross-border payments efficiency is a key motivation. Why central banks are looking into wholesale, both for emerging markets and advanced economies. And in fact, actually last year, the cross-border efficiency has become the key driver of central banks to look into cross-border, wholesale CBDC. And that might also, if you look at the experiments that are currently done worldwide, for example, by the Biz Innovation Hub, you can also see that most of these experiments, they are indeed all focused on wholesale CBDC, more than retail CBDC. Now, what we did also is we asked the central banks that had indicated, okay, cross-border payments, cross-border is a driver for us. We asked those central banks, okay, but what in particular do you think a CBDC could bring? So what frictions in cross-border payments do you think a CBDC could provide a solution, or at least help to alleviate these frictions? And here you see that the central banks actually listed a couple of concrete frictions. For example, the sort of problems or the frictions caused by fragmented and truncated data formats, the limiting opening hours of systems, the funding costs of cross-border transactions, the weak competition in the cross-border market. But I think overall, if you look at these two graphs for retail and wholesale, in general, central banks believe that CBDC can play a role in first the limited opening hours that we currently have of the traditional systems. Because indeed, I mean, CBDC can be made available 24/7, 7 days a week, 365 days a year. So that would actually solve the current mismatch of different operating hours in different countries. And secondly, the transaction chain. So central banks, they also believe that CBDC can help to reduce the length of the transaction chain when it comes to cross-border payments. So getting rid or reducing the number of intermediaries in the provision of liquidity, in the provision of foreign exchange services. So here, central banks think that CBDC can definitely add benefits and contribute to helping improve cross-border payments. So very clearly, central banks in the survey, they said indeed that they see a potential for CBDCs to overcome the current problems in cross-border payments. And indeed, I mean, factoring in an international dimension of a CBDC is one of the objectives of the very comprehensive, ambitious G20 program on cross-border payments. So I'm not sure to what extent people are familiar with this program, but in 2020, the G20 has set up and endorsed this very broad program on cross-border payments to sort of address the key 4 problems that we currently see in cross-border payments. And you all might have the same experience, like currently transactions across borders are slow, can take a few days, high costs, it can be very expensive. It might be difficult to find a payment service provider that is able to provide these services. And they also suffer from some limited transparency. So sometimes you don't even know how long it will take, or sometimes you don't know how high the fees will be. So to tackle these 4 frictions, the program was set up in such a way that it's built around 19 building blocks, so 19 concrete actions. Now these 19 actions, I've put them here around the circles. Most of these actions are about improving current payment systems. So enlarging access to central bank money, or enlarging opening hours, or standardizing ISO messages, or harmonizing legal frameworks. So this is all about improving current infrastructure. However, if you look at building block 19, which is on CBDC, this is really looking forward. It's not about changing current infrastructure, it's thinking about, okay, how can we use the CBDC to improve cross-border payments? So let me say a few words on that building block and what we've done so far. So last year, the BIS Innovation Hub, together with us, the CPMI and the World Bank and the IMF, we published the first report. We call it the Action 1 report, the one on the left here on the slide. And in this work, the 4 entities, we conducted a stocktake of different CBDC designs, and we sort of discussed how each of these designs could be used for cross-border payments. And then building on that work, this year, in July, in the summer, we again came together to the same group of entities, and we published the second report. And in this report, we dive into this a little bit more deeper. So what we do is we assess different options for access to and interoperability of CBDCs for cross-border payments. And let me give a short sort of summary of this report. So what we are doing here in this report is, first we identify different access and interoperability options. So concretely, in what way can central banks make their CBDCs available to banks abroad, to foreign payment service providers, but also to non-residents? And secondly, also we identify a few options for making a CBDC interoperable with other CBDCs of other countries. So once we identify these different models, these different options, each of these options, we assess them based on 5 criteria. And I've listed them here on the slide. So these criteria are actually based on the CBDC principles, the core principles of CBDC issued by a coalition of central banks in 2020 and also the G7 in 2021. And we've sort of focused on these 5 criteria. The first is do no harm. And here we mean like do no harm macro financial situation. So we look at what's the impact on currency substitution, for example. What's the impact on capital outflows, for example, of a cross-border CBDC? Secondly, we look at efficiency. So what does each access option, each interoperability option imply in terms of efficiency? How could it improve efficiency? We look at resilience. We also assess the options based on the interoperability with non-CBDC systems. And finally, their impact on inclusion, financial inclusion. Then after that, after assessing all these options, we also look at the implementation challenges of all these options. So what does it take for central banks and for jurisdictions to implement all these different options in terms of cost, in terms of investment, in terms of governance, in terms of legal and regulatory framework, for example. And then finally, also an interesting way for you to know is that in this report, it contains a very rich appendix with a description of all the completed and ongoing wholesale CBDC projects and retail CBDC projects. They are all one-pagers of each of these projects and might serve as a nice background information. So in short, what we conclude in this work is really that in order for CBDC to enhance cross-border payments, what it really comes down to is that central banks, they need to think about a few questions. And it is really critical that they do that already at the onset of their development work. So pretty early in their work, really to avoid a situation where the design of a CBDC in the end, unintentionally, of course, is creating barriers to cross-border payments. So the questions that central banks need to answer and consider for themselves is first, who will be able to hold and transfer your retail CBDC, wholesale CBDC, and under what conditions? So for example, will non-residents be granted access to a retail CBDC, or will the CBDC only be made available to residents of the country only? And will there be restrictions on the access given to non-residents? For example, can foreigners only use it when visiting the country, so when being within the boundaries of the country, or can they also use it when being outside of the country? And do you wanna introduce caps or fees on the holdings of a CBDC by foreigners, or maybe caps on the value and number of transactions? And also, when it comes to not only residents and non-residents, central banks also need to think about access by payment service providers and banks. So can a foreign bank, for example, hold your CBDC? Can a foreign bank distribute the CBDC to their clients? So these are all access questions for central banks to consider. Another question that central banks need to think about is what model to use for making sure the CBDC is interoperable with other CBDCs around. So in terms of interoperability, what the different options that we are presenting is actually summarized here in this slide. So there are different options. On the one hand, which is in green, central banks can agree on some sort of form of compatibility. For example, through common standards or common data requirements. So that would not mean that different CBDCs are linked to each other. So still you have different CBDC systems around the world, but at least these systems, they speak the same language, which means that for banks or other payment service providers, they still would need to participate in all the different systems, but it might the burden of doing so might be lowered because the standards are all the same. Then if you move more to the right, the integration actually increases. So central banks can also agree on interlinking different CBDC systems. And that interlinking has different forms. I mean, you can choose between different models. Here I've presented them here, like single access or bilateral link or hub and spoke. I will not dive into too much detail there. But I think the main efficiency or main benefit of interlinking compared to compatibility is that the systems talk to each other, and banks, payment service providers, no longer need to participate in every system. So they can only participate, they only need to participate in one system to still transfer payments to each other. Then on the right side of the spectrum, central banks can actually also agree on developing a single system for CBDCs. So one big system, which is hosting different CBDCs. So these are different options of how to make a CBDC interoperable between different countries and how to ensure CBDCs can be used across borders. Now, on the access choice, like I said, there's also different ways to provide access to central banks, to commercial banks outside the country. So in general, there's three models. First, there's the closed access model. And honestly, these models are not too different from the models we see today with traditional payment systems. So also there you see, okay, some central banks decided to use a closed access model, which means that the CBDC, or well, in this case, CBDC is only available to domestic banks and domestic PSPs. Central banks can also opt for an indirect access model, which means that foreign PSPs, foreign banks can hold and access a CBDC, but only through a domestic bank or domestic PSP, so indirectly. And then on the right-hand side, the other end of the spectrum, central banks might also decide to opt for a direct access, which means that both domestic and foreign commercial banks can participate in the system. So again, a whole spectrum of choices for central banks to think about. And yeah, I mean, each of these choices has different implications. It has different challenges, and which poses trade-offs. So I've just put here a few keywords of all the different implications that each choice will have. It will have efficiency implications, resilience, implications for standardization, governance. And yeah, I mean, so it's really up to central banks to weigh these against each other and to make trade-offs. For example, I mean, the compatibility model, so the standardization of harmonization of standards, for example, it will not achieve the same efficiency gain compared to a single system, and it may not be that scalable because it might be difficult to add new countries, but compatibility, the model is cheaper to set up. It's maybe also easier to set up because it requires well, a less enhanced governance model. So again, I mean, here, you know, there are trade-offs. There's also trade-offs between addressing illicit finance and protecting the privacy of the users. Trade-offs between offering freedom to use the CBDC outside the country versus minimizing spillovers, negative spillovers from capital outflow and currency substitution. So I think the key points to take away from this are the following. So first, I think when it comes to cross-border payments and enhancing cross-border payments, CBDCs have an advantage compared to the traditional payment systems in that they provide a clean slate. So CBDCs, they are new to all. Many central banks are now in the process of developing it, experimenting with it. So this is really the time to incorporate cross-border functionalities. But I put here also in a slide, there's an expiry date. So there is an expiry date to this clean slate argument. Because some central banks, what we see already now, they're moving faster than others. So we want to avoid that at some point central banks are sort of advanced too much in their work, that their domestic CBDC is posing barriers, maybe unintentionally, but barriers to the use of cross-border payments. And that's why it's really important that central banks collaborate with each other already now at a really early stage of their design. I think the second conclusion is also that there is not one size fits all model for access and interoperability. So I've presented different models, but central banks, they may have different motivations, which was also shown by the survey. And cross-border payments are not in every country similarly important. So central banks may have different preferences when it comes to an access model or an interoperability model. And therefore, also in this report, we do not prescribe any model. But what we really do is it serves as a tool. We just offer central banks a tool for them to assess what model is most appropriate to them. Third, flexibility of CBDC design. So also because we will likely not see one model everywhere, so we will see different models. That's also makes it important that the CBDC, if you design one, that it's flexible and that it's able to adapt to different CBDC designs, but also that it's able to adapt to different, to the changing world. We're going to see different forms of money. We are already seeing different forms of money. So it's important that the CBDC design, the infrastructure, is able to be interoperable with those as well. And then finally, what I also just said, like I think a condition for success for CBDC in the cross-border landscape, but I think also more broadly, but a condition for success is really international cooperation between central banks, cooperation and coordination. And even if the CBDC is developed mainly for domestic purposes, for the domestic market, the adoption could actually be positively impacted by cross-border functionalities. So the adoption could be boosted by, if it can be used also for remittances, or if it can also be used for when traveling or for trade, for example. And I believe that, this work, but also other international fora, already form an important foundation for cooperation. So we have, of course, the Biz Innovation Hub, which is working closely together with central banks around the world. And I think this cooperation is super important. And especially also, it's really important, and that's also what we stress in this report, is that that we involve a broad spectrum of countries. Developing countries, emerging market economies, small, big countries. It's really important that everyone is heard, and that we take all the different preferences on board when having the dialogue, but also when experimenting. So let me stop here. I'm happy to take any questions on the survey, on the report, on CBDCs in general, and also one marketing. So we are, like I said, we are now working on the 6th round of the CBDC survey. So if you are interested, if you are a central bank, as a central bank, and you're interested in participating in the survey as well, feel free to reach out, and we're happy to add you to the list of participants. So thank you very much.
Ms. Annika Kosa, thank you very much for sharing with us your outstanding and inspiring presentation. Now we have just one question from the audience, and the question is from Massimiliano Rossetti from the Banca d'Italia. What are the advantages that you would see for cross-border payments based on CBDC as opposite to those based on existing fast instant payment systems? Please, can you answer this question?
Yeah, no, that's a very good question. So the question really, like, what's the difference between a CBDC and a faster payment system, and what are the benefits of either system, right? I think one key difference of a CBDC compared to a faster payment system is it's the claim on the central bank. It's based on central bank money. The other features that are often referred to, like programmability, maybe security, all these features, I think it might depend on the design. So it really depends on how the system is designed. What features do you incorporate in your CBDC, but also what features do you incorporate in your fast payment system? So I think it's really difficult to determine like what is better. And I think that if you look at the cross-border payments program of the G20, it's the program is also not built on one measure. It's really built on different measures and which altogether complement each other. And I think that's also how we should think about the use of the CBDC for cross-border payments. It's another way, it's a complementary way to improve cross-border payments on top of all the other measures that could be taken. For example, interlinking different faster payment systems, which already we see today. There are some initiatives going on there. And yes, there too, the major steps can be made using the faster payment system and linking them. So I think it's all about complementary pieces, and they all have a role to play, can play a role.
Thank you very much for your impressive explanation of this question. Now we have one more question from Christian Spirov, and the question is CBDC on public blockchain, private blockchain, or based on different technology other than blockchain? What is the attitude of the central banks regarding the underlying technology?
Yeah, very good question. So yeah, there's different ways in which the CBDC can be developed. And I think this is really up to central banks to decide themselves. There is no necessary, I mean, the CBDC does not need to be built on a blockchain at all. And it's up to central banks to decide what they prefer. When we did this work, and we worked together with the central banks and the Innovation Hub and the World Bank and the IMF, how we approached this project and the report was really, we took the technology neutral stance. So in this work, we sort of leave it open and we don't judge, we don't prescribe the technology there. Yeah, I think this is really up to central banks to decide based on their own preferences and also in collaboration, I think, with the relevant stakeholders in the market.
Thank you. If you do not have any additional questions, we can complete this presentation. Thank you once again, Annika. The next presenter for today is Ms. Ria Roering, who is coming from the Netherlands Bank. She is a senior policy advisor working in the Payments and Market Infrastructure division of the Dutch Central Bank. She is specialized in the central bank digital currencies and retail payments and has a background as a microeconomics. Ms. Ria Roering is going to make presentation about the digital euro, and the topic of presentation is the digital euro, why, what, and how. Ms. Ria Roering, the floor is yours.
Yes, good morning, everybody. Thank you for your very kind introduction. It's a pleasure for me to be here. Also, I enjoyed the morning session, and I would like to give a presentation on the digital euro. Why, what, and how. I think my presentation will take about 20, maybe 30 minutes, but I'm also very interested in hearing your questions and your views, so maybe we can have a fruitful discussion at the end of the presentation. Please let me start by sharing the screen. Hopefully this works. Is it visible to you? Yes. Okay. Unfortunately, you are no longer visible to me. Yes, so what I would like to do is first talk about what is a digital euro. This morning, Ignacio Tirol, Gabriel Soderberg, and Anneke Kossen also discussed it, but I will dive a little bit deeper into it. Also in the digital euros objectives, and to elaborate on what is the objective of the euro system, and the use cases and possibilities for the digital euro. Talk a little bit about programmability of the currency, the distribution and the role of the central bank, and some policy dilemmas. So first on what is a digital euro. It's good and interesting to look at the different liabilities of different institutions. If we look at the central bank has a liability. Cash is a liability, and this is a physical form. So it's for the general public. As opposed to central bank deposits, which is a digital form, but it is a limited access. It is not for the general public, not for the consumer. And we would add to that the CBDC, also on the liability side of the central bank, as a complement to cash, and as a complement to central bank deposits, which are not available for consumers. If we look at a private entity, a commercial bank, there is a commercial bank money, the deposits of consumers, but there is also e-money as money, and there is stablecoin. Stablecoin as a claim, a liability on an identifiable entity. And what is not a liability is a crypto asset. This is not a liability of an entity. Therefore, we do not consider it as a means of payment, as a currency. We always prefer to talk about crypto assets as opposed to cryptocurrencies. And because in the current setup and without the proper regulation, we don't regard it as a means of payment. So it's good to make a distinction between these different forms of money or assets and liabilities of different institutions. And the BIS has developed the so-called money flower as a way to look at it. And if you see, hopefully you can see this slide. There are three circles. There is central bank issued money. There is universally accessible money, so that's for all the consumers and citizens, and there's electronic money. And the sweet spot where all the three circles are involved is where the central bank digital currency, CBDC, is. There is currently no central bank issued, universally accessible and electronic form of money. So this is where CBDC is located from that perspective. As you know, as was mentioned by Ignacio Tirol this morning, the Eurosystem started the investigation phase of a digital euro a year ago. We're now halfway there. At the end of next year, there should be a decision whether or not we're going into the realization phase. But it's good to look at the objectives which were confirmed in this investigation phase. And also Anneke talked about different objectives of different central banks. For the Eurosystem, it is not so much financial inclusion, as is an objective for mostly emerging market economies. For us, it's to preserve a monetary anchor, to preserve public access to central bank money. And I think it was Gabriel Soderberg who also mentioned that if we do nothing, and with the diminishing role of cash, you could say there is privatization of money. There is no longer public money available, and the monetary anchor, we think it's important to preserve this for public goals and accessibility for everyone. Another objective of the digital euro is to defend the strategic autonomy by increasing the independence of non-European payment solutions. And also, this might sound a little bit defensive, but also increase the independence of, or be up to the task of the potential rise of foreign private digital monies or foreign CBDCs. I think it's a public secret that a lot of central banks started investigating central bank digital currencies when Libra was announced. Facebook announced that it was going to develop a digital currency. Later that was Meta. Facebook became Meta, and later they decided to stop the project. But it is still possible in 10, maybe 20 years from now, this still is a possibility for private companies to develop, since it's interesting to have your own currency in your own network, in your own ecosystem. So these are the objectives. And it is good to mention that it is complementing and not substituting cash and wholesale central bank deposits. It's also important to mention that supervised intermediaries, commercial banks, will be important in the distribution of a digital euro. We as central bankers, we can do a lot, but we're not very good at tailoring towards client needs. We're not a commercial bank. We're not the best suited to be innovative. Market players are better at that, and supervised intermediaries will be very important in the distribution of the digital euro, also for the onboarding of clients, the help desk function, etc. My colleagues and I would be terrible at serving consumer needs. Also, the digital euro is a source of innovation and a public good, and this should not crowd out banks and innovation in payments. So this is also important because in the private sector, many people are afraid that this could disintermediate the sector, which is not the aim. It's not the objective. It should not crowd out private payment solutions. Go to the next slide. We discussed what would be use cases for the digital euro. When and how should people be able to use it? To choose those use cases or payment segments, we have used two criteria. First, does the payment segment target an important market segment, thereby having the potential to stimulate the network effects in payments. And the other one, the other criteria is, does the use case in a timely way help to fulfill the policy objective we just mentioned. And then we came to the conclusion that, of course, a digital euro should be usable, should be able to be used in physical stores, since they are an important market segment, accounting for more than 40 billion transactions in the euro area. So this is the amount, not the number, not the amount of money which is being involved in that. E-commerce payments, they are less numerous, but are expected to grow rapidly, double-digit growth. And in this segment, there is no public money available. It's not possible to pay with cash online when you shop when you are shopping in a web shop. So e-commerce is an important payment segment. We want to make the digital euro available, and person-to-person payments, which is now often physical money cash, that there should be a digital euro. And also, last but not least, government payments. What we mean with that is, for example, the payout of public welfare allowances, or payment of taxes or fees. As a consumer, you have to pay for getting an identity card. This should work as a role model, the government payments. What is currently not in scope or not prioritized is machine-initiated payments and business-initiated payments. So B2B is not a priority for us at the moment. And the next slide is, if we talk about the use cases and the possibilities, we can. It's not an objective of the digital euro, but of course it would be helpful if it fosters innovation and digitalization. So programmable payments can be interesting also for supervised intermediaries if we can increase those. What are programmable payments? For example, if you say that every first day of the month, transfer 100 euros from grandmother's bank account to granddaughter's bank account, or from A to B. And if so, the check in the programmability layer of the payment is it the first day of the month? Yes, then initiate the transfer of the amount from A to B. This is important. It's important to make a distinction between programmable payments and programmable money. Programmable money is if you earmark money. If you say this digital euro cannot be used to buy alcohol, or to be in a casino if you're under 18, or this is what we are not trying to achieve, because we say money is and should money issued by a central bank is and should always be neutral. So it's up to the legislator to discourage, for example, that younger people are using money for alcohol. This is not the aim of a digital euro, and I think it's important to make a distinction, although they look quite similar, but make a distinction between programmable payments and programmable money. So if we look at programmable payments, there are three types you could say. For example, event-triggered payments. These are delivery if a payment is done. For example, or also automized repayments for buy now, pay later schemes. Then there are split payments. In the future, you could think of automatic tax collection. So if you pay at in a shop, that part of it goes to the merchant and part of it goes to the tax authorities. And another possibility is usage-based payments. For example, with Internet of Things, you can imagine, well, it's a little bit futuristic, a little bit far in the future, but if your dishwasher, a dryer, or whatever electronic equipment needs supplies when running low, it could order new capsules, or a printer short on toner. It can initiate those payments. So that would be really innovative. Then on the how, so we have defined use cases for the digital euro, the payment segments in which it would be very welcome if there was central bank money. But the question then is, how do we provide consumers and merchants with central bank money? That's about the distribution and the role of the central bank. You could make a distinction in how far you go as a public authority. If you look at the diagram, on the left you see yellow and blue. The blue is the role of the euro system, how far it intervenes in the market, and the yellow is the role of intermediaries in how much they have to do. On the left-hand side, you see that the euro system only takes care of the issuance of the digital euro. And then the intermediaries have to do a lot. And on the right-hand side, the euro system, the central bank, goes as far as to the end user, the end-to-end experience, the end-to-end solution for the consumer. So you can imagine that this is a lot of intervention in the market. So a key question for us is, how far do we want to go? If we look now at banknotes and coins, we only issue them, and it's up for the intermediaries to take it further into the market. So here again are our 4 layers. The issuance, from the issuance to the end-to-end solution, and what we have analyzed is that if we only do the issuance, the end-to-end user experience could be very different in the different euro area countries. It might be very positive for innovation, but the trade-off is that it will cause fragmentation. So for us, it's not a preferred option. If we go to the other side, the end-to-end solution, there is less role for supervised intermediaries. There's less role for innovation, but it will be a homogeneous end-user experience. But in our analysis, what was the preference is the payment scheme. And so if we set up a scheme and a rule book on how to process payment transactions, this will facilitate a homogeneous end user experience and will respect the role of supervised intermediaries and still offer room for innovation. So our current thinking is that we want to set up a payment scheme. So like SEPA, but then for the digital euro. And this in order to make sure that we have a harmonized user experience and also leave room for intermediaries. Then another policy dilemma is about privacy. I think it was also mentioned by other speakers that privacy is one of the interesting properties of cash, and it's considered the most important feature of the digital euro by consumers. This was the outcome of our public consultation, but also of focus groups. So in the digital era, there is no such thing as privacy because there are always digital traces. And also, we have European Union laws and regulation which require monitoring of users and certain transactions in the context of anti-money laundering and KYC, know your customer obligations. So how to deal with that? We said that anonymity is not possible, but we also do not want fully transparent for the central bank. That would also be not desirable. So the current baseline scenario is that the digital euro transactions are transparent to the intermediary. And so they do the KYC during onboarding and they do the AML CFT checks. But what we have also said that it would be interesting to be non-transparent to third parties. So there is a KYC check during onboarding. Are you who you say you are? And then after that, transactions in certain amounts are not known to the intermediary nor to the central bank. But in order to achieve this, we have to change legislation. So this will be a political process. And the other option is selective privacy, where you say that there is a higher degree of privacy for low value transactions. And currently, the European Commission is working on a set of legislation or is identifying which laws should be adapted if we were to introduce a digital euro. And part of that is also with regard to privacy possibilities. Yes, and there are more policy dilemmas I would like to share with you. Of course, if we introduce the digital euro, minimizing the industry investment costs are essential. Not producing undue dependence or giving undue preference to certain providers is also an important aspect we have to keep in mind. Offering a distinct value proposition that encourages consumers to pay with digital euro. But I think what also was mentioned, that it should be a success, it should be adopted by consumers, but it should not be too successful. So this is a balancing act, and this also has to do with whether the digital euro is seen as a means of payment or as a storage of value. And we do not want it to be a storage of value. Cash is currently a storage of value, a store of value, but this could be problematic if it's excessive use of store of value. Then it would substitute commercial bank deposits away from commercial banks, and which is of course an important funding source, and that could create financial instability. So that's why we are working on tools such as a cap, a limit for digital euro usage. Also, I don't think there is going to be an interest paid on a digital euro. But this is for later to be decided, but this is the current thinking I would like to share with you. And it is, of course, important to not crowd out private initiatives. So I think Anneke already touched upon this, and she had a more updated version on how central banks are working on central bank digital currency, and she made a distinction between retail and wholesale CBDC. So this is our project line. As I mentioned, we're halfway there in the investigation phase. We're looking into the exact role of intermediaries, and what is also very important, of course, how to make it interesting for intermediaries and how to incentivize intermediaries to distribute the digital euro. So that it's not only a cost for them, but also an opportunity. And we're working on that until September 23. Then the Governing Council is going to decide on the possible launch of a realization phase. So yeah, that was, I think, the presentation. I hope you're still there, and I hope you have questions for me, and we can discuss different views.
Ms. Ria Roering, thank you very much for your very impressive presentation, especially for emphasizing and explaining the practical use of digital euro and the possibilities and benefits it offers. So in this context, I can see that there are a lot of questions for this topic, so we can develop a fruitful discussion. The first question is from Mr. Sahib Hasanov. He asked, why do you choose these use cases for CBDC government payments, P2P payments, and e-commerce physical store? What are the benefits of CBDC in these cases over ordinary payments with cards? And the second question, which is additional to the first question, he said, it's interesting to know the process of defining and users' pain points. Could you share information about methodology of this process? Thank you.
Yes, thank you. Very interesting questions. Yes, first on the benefits of using a digital euro instead of cards, for example, at the point of sale, if I understand it correctly. This is driven from our perspective of what the objective of a digital euro should be. As I mentioned, that is preserving a monetary anchor and increasing the strategic autonomy of the euro area. Currently, in the euro area, we are highly dependent upon international card schemes for the point of sale. So that is, for example, MasterCard, Visa, and in the Netherlands, we, for example, do no longer have a national and domestic card scheme. So in order to achieve the objective of increased strategic autonomy, the digital euro at the point of sale would be interesting. And then, of course, but the question is, what is the benefit for the consumer? And that has to be, that we have to design that so that it's interesting for the merchant and the consumer to use digital euros. But it's a very good question. Also, if you think about our prerequisite that we do not want to crowd out private payment solutions from our supervised entities. And there was also a question on why prioritize government payments from governments to consumers and consumers to governments as a use case. And this has more to do with leading by example. So if we say that public money is important, it would also be good to to practice what you preach, and also as a government have public payment possibilities available. Then there was another question. Let me see if I can see it in the chat.
Question from Massimiliano Rossetti. He has a comment. He said, several speakers today highlighted the need to introduce a digital form of public money in order to cope with the ongoing process of digitization of payments and provide a monetary anchor in a digital world as well. In your opinion, does this fully apply also to jurisdictions that have already in place a widely used instant payment system in central bank money? Or is a CBDC less critical in those cases, or at least something to be introduced taking into account the already existing IP system and somehow complementing, integrating it? Would you try to answer this question from Massimiliano?
Yes, that's also a very good question. I think central bank money is also in this case complementing and integrating, because it should be based on instant payments, but complementing private money. So in these jurisdictions, if there is going to be also a declining usage of cash in the future, then they will face the same problems, that there is no longer public money available. Of course, then public authorities still play an important role in providing instant payments settlement, for example, but it still is private money involved and not public money. Hopefully that answers the question, but also interesting maybe to hear his views, because you can have different views on this.
Thank you very much for answering also this question. We have one more question from Oksana Polova. She said, it's interesting to know how the AML will be carried out in EU with digital euro. Who should carry out the AML, the digital euro providers or the ECB? Could the digital euro be anonymous as a token-based or an account-based?
Yes, Interesting. Yes, the AML who should carry this out. That should, in our opinion, not be the central bank. Supervised intermediaries are best positioned to have the client relationship and the client contact, and they know their customers and are in the best position to carry out the AML processes. Can it be anonymous as a token-based or an account-based solution? Up to a certain extent only, not fully anonymous, but if we, I think it was Ignacio Tirol who talked about an offline peer-to-peer solution for the digital euro. This could be the transactions after onboarding could be more granting more privacy for users. But as was mentioned, currently the legislation is not fit for that. It's not providing that solution, so that should be adapted, should be changed.
Thank you very much for this explanation. And now I would like to invite Ms. Annika Kosa to add something on this from her point of view.
Yeah, thank you very much. So I was just thinking that the previous question from Massimiliano about the potential benefit of having a CBDC if you also have already a faster payment system, or if you are considering to issue or launch a faster payment system. So I just wanted to share, and I think it also comes back to the question that was asked also in sort of my section. And I just wanted to share with you that this is a question we hear a lot in the central banking community. From different countries, they really wonder, okay, you know, what would it bring? What's the additional value? And I agree with Ria that the key difference, or one of the key differences, really features of a CBDC versus public money, is the public nature of the central bank digital currency. But apart from that, like setting that aside, I think many features that a CBDC could take on could maybe also be served with a faster payment system, or vice versa. I'm not sure. I think the design, I think, is key. But to get a better understanding of exactly this question, what we are now doing, like I said, the annual survey that we are running on CBDC. So this year, in a few weeks actually, we will be distributing the sixth version, and we will be incorporating exactly a question on that. So we will be asking central banks for their views on whether there is a benefit of having both a faster payment system and a CBDC. And if they think so, we also ask them, okay, but what then would the CBDC add on top of a faster payment system? Or what would the faster payment system add on top of a CBDC? Or maybe also what would be the benefit in general of having two complementary systems, or subsidiary systems. So I think really the question is, like, are they rivals, or are they sort of complementaries? And so again, to answer that question and to provide central banking community with more insights on that, we will be doing research on that as well.
Thank you very much for your amazing explanation, and I think that you give additional value to this answer.
Yes, thank you, Anneke. This is a very good point you raised. And to elaborate a little bit more on that, I think you mentioned the public nature of the digital euro, of central bank digital currencies, but the difficulty also is, are you looking at it from a institutional or a central bank perspective, or from a consumer perspective? So we have these objectives, which are, you could say, institutional objectives, and a consumer is not going to use means of payments only for some institutional objectives, only if it has added value for him or her. And so that is that's the challenging question for us, that we have to align the institutional objectives we have, for example, to set up different rails, to make the payment system more robust, to have a monetary anchor, but to align it with consumers' needs for them to experience value-added services. That's the difficulty.
I think in any case, there also interoperability comes in again, even domestically. It's like, I think from a user perspective, what they want to do, if they adopt both, if they decide to do so, they also want to easily convert one type of money into the other, and they don't need to want to think about it, and it should all be sort of seamless. And I think there, like, domestic interoperability between the different systems is key for ensuring adoption and user friendliness.
Do we have any additional questions from the audience? Okay. I feel pleased to notice that the first day of our conference was very dynamic and full of insight. At the end of the first conference day, once again, I would like to thank the panelists for their participation and fruitful discussion. Many thanks to the lecturers for their very interesting and stimulating contributions, the audience for initiating very interesting issues for productive discussion, and thank you all for your attention. We are inviting you to join us tomorrow on the second conference day on the same WebEx link before 12 a.m. Have a nice day and goodbye.
Bye-bye.